Good evening, Garage Gang. Thursday, February 12th. Bond week is over. The last lug nut has been torqued. The lift is coming down. And the question every single person in this market has been asking for 5 straight days finally has an answer. Did the chassis hold? Yeah, it held. But the paint's scratched, both bumpers are kissed, and there's a check engine light blinking that nobody wants to acknowledge. If you're new to the garage, smash that like right now. Hit subscribe. We don't do hopium in here. We pop the hood, we read the parts, we tell you what's actually broken. Share this with your buddy who keeps checking Coinbase in the bathroom and telling everyone he's fine. He is not fine. Send him here. One viewer at a time. Let's go. Bond week, the final Dino results. 3 auctions, 3 days. The U.S. Treasury just ran $122 billion through the financial systems dyno. Let me give you the printout. Tuesday, 3-year note, $58 billion. Yield 3.518, bid to cover 2.65. For every dollar the government wanted, 265 showed up. That's a line around the block at a dealership that's supposed to be going out of business. Wednesday, 10-year, $39 billion. Yield 4.177. Bid to cover 2.55, right on the long-term average. Foreign central banks and sovereign wealth took the bulk. The adults showed up, wrote the check, didn't haggle. Today, 30-year, $25 billion. Yield 4.750. Bid to cover 2.43, up from the last auction. People are lining up to lend America money for 30 years at 475 in the middle of a policy revolution. That's not panic buying. That's a calculated bet that the new engine works. No tail on any auction, no dealer stress, bond market passed inspection, frame straight, welds clean. But while the bond guys were popping champagne, Bitcoin went from 70,000 to 65,000 in 4 days, 7%. Like a transmission fluid leak nobody checked until third gear disappeared on the freeway. The Warsh Doctrine, new engine, new rules. Kevin Warsh, incoming Fed chair, just killed the Fed put and buried it in the backyard. His play, cheap short-term rates for businesses building real things, AI factories, nuclear plants, but aggressive tightening on the long end, draining the speculative fuel supply. Think of it like this. If you're hauling cargo, building something real, he's giving you premium unleaded. If you're doing donuts in the parking lot with borrowed money and a 100x lever, he's cutting your fuel line, calling the tow truck and sending you the bill. The reverse repo buffer, $7 billion, down from $2 trillion. That's not a cushion anymore, that's a coaster. Every dollar of QT now hits bank reserves direct. No filter, no airbag, bare knuckle. That's why 616 million in ETF inflows this week couldn't save Bitcoin. 122 billion in bond issuance versus 616 million in crypto buying. You're trying to fill a swimming pool with a Dixie cup while somebody's draining it with a fire hose. Bitcoin, 65K in the higher low. Here's what the tape actually did today. Bitcoin opened 67.5, bled all morning like a slow radiator leak, hit 65,000 around 10 a.m., the exact Fibonacci 0.618 retracement. Rising channel support, everything lined up like a 4-wheel alignment rack. And it bounced. 2 long buy signals fired, clawed back to 66,473, printed a higher low, first constructive structure in 4 days of bleeding. Now here's the stat that should make your jaw hit the floor. VanEck says Bitcoin is negative 2.88 standard deviations below its 200-day moving average. That has never happened in 10 years, not COVID, not FTX, not the 2022 bear, never. We are more stretched below trend than any moment in a decade of data. And the realized goal is half of what it was during the last crash. This isn't a panic sell. This is a slow structural grind, and those end when the catalyst flips. The catalyst is 12 hours away. CPI tomorrow, the ignition key, 8:30 a.m. Eastern, January CPI. This decides everything. Hot CPI, bond sell-off, yield spike, and paradoxically, that's good for crypto because capital stops hiding in 475 government paper and starts hunting for upside. That's the turbo kicking in when the RPMs are already pinned. Cool CPI, safe haven bid strengthens, institutions stay parked in bonds, Bitcoin defends 65K with less ammo, path to 63.5, then 60,000. That's the engine stalling on a mountain pass with no shoulder. The hidden leverage trap. Here's what should genuinely worry you going into that print. Bitcoin open interest rose 1% in 24 hours while price dropped 1.2. Ethereum OI rose 1.2 while price dropped 1.3. Leverage is building into weakness. That's like watching someone pour gasoline around a campfire that's already throwing sparks. Nothing happens. Nothing happens. Then everything happens. CPI is the spark. If that number forces a move and all this hidden leverage liquidates at once, it won't be a bleed. It'll be a flash wipeout. Airbags deploying. Glass everywhere. And Solana, the quiet killer. Stablecoin supply on Solana dropped 2.7% in one day while TVL barely moved. The buying power underneath is evaporating. DEX volume down 30% on the week. When books get that thin and a shock hits, price doesn't walk down the stairs, it falls through the floor. The AAV grenade. One whale, 28.4 million in AAV collateral, 2.3% of the entire token supply, health factor 1.0, flatline, liquidation trigger at $104, AAV trading 110 to 115, $6 between stable and catastrophic. Aave processed 429 million in liquidations these past 2 weeks. Zero bad debt, zero downtime. The protocol is a tank, but that whale is a grenade duct taped to the turret. 72 hours, 3 roads, base case 60%, CPI near consensus. Bitcoin holds the 65K higher low, grinds to 67 to 68. Monday's a holiday. Tuesday, FOMC minutes plus 2 Fed speakers. Tuesday might be louder than Friday. Bull case 20%. Hot CPI, bonds dump, capital rotates. The 2.88 Sigma rubber band snaps. Bitcoin rips to 69.70. Shorts get carried out. Violent move, like a sleeper car hitting the dyno and surprising everyone in the building. Bear case 20%. Cool CPI 65 breaks. Cascade to 63.5, then 60,000. Aave whale triggers. Solana stable coins drain into a holiday weekend with nobody at the desk. You don't trade this scenario, you survive it. The garage read. Bond week's in the books. Chassis held, but the rules just changed. Fed put dead. RRP buffer dead. New leverage already creeping back in. The flush happened 2 weeks ago. The lesson lasted about 48 hours. 65K held today, higher low printed, that matters, but only if CPI doesn't kick the jack stand out at 8:30 tomorrow. 4 things to watch. 1, CPI reaction and yields, not the headline number. 2, does OI flush or hold after the print? 3, Aave whale at 104. 4, Solana stablecoin supply. Those 4 gauges tell you everything. Smash that, like hit follow. Share this with every Daysian you know. Tell your mom, tell your barber, tell that Uber driver who asked you about crypto last week. We build this garage one viewer at a time, and right now the garage is the only shop in town that'll actually show you what's under the hood. Engine's hot, safety off, let it rip.